You know when you're driving through Kentucky and you spot that one house? It has amazing bones, tons of potential, but man, it is a serious fixer-upper. Well, today, we are talking about the one tool that lets you actually buy that house and wrap all the repair costs into a single mortgage. So, you found it. The location is perfect, the layout is exactly what you wanted. But wow, that kitchen is straight out of the 70s, and the roof looks like it's seen a few too many winters. You just know a standard mortgage isn't going to cover the cost of those renovations. So, what now? Do you have to walk away from what could be a total gem? No way. You don't walk away because there's a loan that was practically invented for this exact scenario. It's called the FHA 23K loan. And honestly, it's the hero of our story today. It lets you bundle the purchase price and all the renovation money into one single manageable loan. So what is this thing really? At its heart, the FHA 203K is a single government-backed loan designed for rehab projects. So instead of trying to juggle a mortgage for the house and then a separate high-interest loan for construction, this combines everything. It is an absolute game changer for bringing some of those beautiful older homes all across Kentucky back to life. But here's the thing, it's not a one-size-fits-all deal. You've got two main options. Think of the limited 203K as your personal toolkit. It's perfect for cosmetic stuff under $35,000. We're talking new floors, a kitchen facelift, maybe a new roof. But for the big jobs, that's where the standard 203K comes in. This is the full construction crew for moving walls, fixing foundations, or building an addition. For that one, you'll need a project supervisor, who's known as a HUD consultant. Okay, so how do you actually go from finding that diamond in the rough to, moving into your beautifully renovated home? It's a journey, for sure, with a few more moving parts than a typical home loan. So let's pull out the roadmap and take a look. This whole journey really happens in a few key stages. First, you do the usual stuff. Find the house, make an offer, and apply with a lender who specializes in these loans. Next, you build your team. You get bids from contractors, and if you're doing a standard loan, you hire that HUD consultant. Then, after your lender does all the underwriting and appraisal work, the loan closes. Now, the renovation money doesn't go to you. It goes into a protected account. Then the work begins, and after one final inspection, you get the keys and move in. Now, there are a few unique ideas here you really need to get. That HUD consultant, they're basically your project supervisor on the big jobs. The escrow account is like a secure lockbox. The lender holds the renovation money there and only pays the contractors as work gets done and inspected. And this is huge, the after-improved appraisal. This means the bank appraises the home based on what it will be worth after all the awesome work is finished. This is how you get the funding you need. So it sounds pretty great, right? But what does it actually take to qualify for one of these? I want you to think of these requirements not as a bunch of hurdles, but as the keys you'll need to unlock this powerful loan. For the most part, the rules just follow standard FHA guidelines. Lenders are going to look for a credit score of at least 580. Though to be honest, here in Kentucky, most of them really want to see 620 or higher. They'll also check your debt-to-income ratio to make sure it's around 43% or less. And here's a big one. You have to live in the house. This has to be your primary residence, not an investment property you're flipping. And now for what might be the best part of this whole program. The minimum down payment is just 3.5%. And get this, that's 3.5% of the total loan amount. That means the purchase price plus all the renovation costs combined. This is what makes turning a fixer-upper into a dream home so accessible for so many people. Okay, we have covered the what, the how, and the who. But please, lean in for this next part, because it is without a doubt the most important piece of advice in this entire explainer. We're going to talk about the single biggest mistake people make, and more importantly, how you can very easily avoid it. Okay, so just picture it. You've been through the whole process. Your loan is finally approved. The contractor is ready to go. You are so excited to get this project started. What is the very first thing you do? The most important thing you do is absolutely nothing. You wait. That is it. You wait for one very specific event to happen before a single nail is hammered or a can of paint is opened. And here it is, the golden rule. No renovation work can begin before the loan officially closes. I mean it. If you start even one day early, you could disqualify the entire property from the 203K program, which puts your whole dream at risk. It is the single most common and most costly mistake we see buyers make. So remember, with this loan, patience isn't just a virtue, it is an absolute requirement.